is pissed. Holy smokers, the market is pissed. Which is weird because Jerome Powell literally just declared, quote, "It's pretty clear we've avoided a recession." You'd think the market would rally on that, but instead, this is what the market did. The Nasdaq decided to start tanking by 2%. Bitcoin decided to sell off by about 2,000. Tesla decided to sell off by about 6.5%. What the HE double hockey sticks is going on? Jay Powell basically just declared victory. He literally said, "We've avoided a recession." Now, in fairness, he did say the Fed's not allowed to own Bitcoin, and we're not looking to change that law to have a strategic Bitcoin reserve, but that frankly came out of nowhere anywhere. We did hear Jerome Powell tell us that inflation is just a technical issue, that we're really in a good place, and that he, quote, feels good, and he expects another good year. So I'm kind of curious, is the market pulling an inverse Kramer on Powell? Jay Powell goes, "No recession. I expect another good year. Things are great." Ding. And the market just tanks? What's happening? Because Powell certainly doesn't seem concerned about inflation, even though his committee members seem pretty concerned about inflation to where they're only projecting 50 basis points of cuts in 25 and another 50 basis points of cuts in 2026, which basically is a whole chunk slower than what we were previously expecting. We thought we'd get 4 cuts next year. We're down to 2. That's it. It's a lot slower. And a lot of folks were actually thinking we'd get even more cuts in 2025 as the economy slows. So what gives? You got Jay Powell saying inflation's just a technical issue. You've got rate cuts getting slowed down. Is there some kind of warning that Powell gave us here that's starting to freak markets out? Well, I think the answer to this is yes. Now, I'm going to preface this because I saved this particular spot. But I want to preface this by saying that Jay Powell was not overly concerned at this point that the labor market is having major issues. But he did say some things that made some people sort of scratch their heads a little bit. And I think it's worth playing that clip. As long as I can keep this clip and not screw it up, let's see if I can do this correctly. Listen to this clip here. He does later suggest that this isn't a big deal, but just listen to the hints in this portion. Hopefully, again, I was able to save this live at the right time. I think this is why markets really started selling off, so I hate to kind of leave you hanging on that. But this is what he said. He said, "The downside risks to the labor market appear to have diminished, but it's cooling further in a gradual and orderly way. We don't think we need any further cooling. It's softer, the labor market is softer than before the pandemic. That's not good, right? Job creation is well below the level that would keep the unemployment rate constant. In other words, things are worse in the labor market than they were in 2019, and the unemployment rate will probably keep trending up a little bit. Surveys are showing a much cooler labor market now than they were showing in 2019. Now, he does say that things are still gradually cooling, and later he clarifies that maybe this isn't that big of a deal because, after all, you're only in a position of seeing about maybe a tenth or so of the unemployment rate going up every other month. So he kind of casts aside the concerns about the labor market, but this commentary is really when the market started freaking out a little bit about the labor market. It was really when he was responding to the question from Mrs. Smilyak over at the New York Times. That's when markets started getting a little bit nervous.
Officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Listen to his labor market talk here.
So let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals, maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%.
Don't want more.
Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you.
Okay, so broadly on track with inflation, but there were some concerns recently regarding inflation, blah, 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 blah. I'm obviously not going to replay you the whole press conference. But think about that for a moment. He basically just told you, for right now, yeah, things are definitely softer than they've used to be, but maybe this can still be Gucci. There was a lot of uncertainty there. But what's interesting is the Fed didn't want to show you that uncertainty. In fact, let me show you this. This is the summary of economic projections. On it, you will find the Trump launch sale coupon code for the Trumponomics course. Okay, you already know that's at meetkevin.com. No, really what you're going to find here is they're showing you, in my opinion, a possible blind spot, I'm calling it. Right here and right here. The Federal Reserve is showing you that they actually don't expect the unemployment rate to go anything higher than 4.6%, which is weird because Jerome Powell just gave you this big warning where he's like, dude, things are worse now than they were in 2019, and we kind of just hope they stop getting worse. But that's what he told us in August. Remember in August when he said we seek no further cooling? And then what did we get? We got more further cooling. Why then are they not telling us the truth that this unemployment rate could go up more? Well, it's possible because Jerome Powell is trying to convince us that the recession has been avoided. He literally said we can say we have avoided the recession. He literally said that. Maybe because they have to self-fulfill that to actually prevent the recession. Because if they wrote on this summary of economic projections that there was one dude, or doofus, as some would like to say, that said, oh no, I think the unemployment rate's going to go up to 6.5 or 7%, that's going to price in recession, stock market would crash, and then you'd actually have your recession because the stock market would crash while interest rates are skyrocketing, which is like literally the stupidest thing ever. If you look at what's happening with Treasury yields right now after this Fed meeting, it's a complete SH9T show. Like, this is like a stagflationary disaster of a market response. You have the 10-year Treasury up 11.3 basis points. The 2-year Treasury is up 11.6 basis points. I mean, look at it on screen here. It's a complete disaster. You have the yield curve still about 14 basis points uninverted. But what happens is, if this kind of pain happens where the stock market goes down at the same time as yields keep rising, all you're doing is tightening financial conditions on top of frothy financial conditions when Jerome Powell is hinting to you that, labor market conditions could get worse in a jiffy and we'll be prepared to respond to those. Now, this was really confusing because multiple times throughout the press conference, he told us, hey, things are better with inflation, like things are going good with inflation. But then he told us that committee members voted to write in lower rate cuts for next year because maybe inflation's starting to move sideways and that inflation was a major reason why we penciled in fewer rate cuts for 2025. So which one is it, Powell? But then I got really confused because listen to this, and you could go play this yourself. Listen to this. Jay Powell says forecasts for inflation are higher than they were in September. You had higher months of inflation in September and October, and then you got November back on track. But this was really confusing because then I went to go look at the November inflation data because he's basically saying, we had a couple months of higher inflation in September and October, and then we got back on track in November. So I looked at the November inflationary readings and I'm like, what the F are you smoking, bro? CPI month over month and core month over month was both of them were sitting at 0.3%. So Powell, what charts are you reading? On one hand, you're saying the labor market is fine. It's worse than it was in 2019, but don't worry, it's fine, just as long as it doesn't cool any further. And then you're telling me that inflation's fine. It's really just a technical rounding error. He said those words. He's like, inflation's just a technical issue at this point. He literally said that about inflation, talking about owner's equivalent rents and housing inflation taking a little longer to get there, and insurance inflation, which we've talked about that. We already know that's all old news, right? But what are you smoking when you say inflation's back on track in November? And then I look at the numbers in November and I'm like, bro, this is not back on track. 0.3% on core and month over month non-core annualizes out to 3.6%. That's not back on track, bro. So like I'm just blatantly confused by Powell here. Now, Jay Powell then goes into talking about, how we missed our end of the year projection for inflation, and that's why we're writing in lower cuts for next year. That was the, quote, single biggest factor. I wrote that down. He said that was the single biggest factor for writing in fewer rate cuts for next year. But then, even though that was the single biggest factor, he also then talks about how now they're starting to work inflation from tariffs into their forecasts, which previously they say they wouldn't do. Dude, the last two Fed meetings, they're like, we're not going to consider tariffs until the policy actually hits because the policy could do anything. We don't know what the policy is going to be. We'll wait for the policy to hit. Then we'll see what impact it has, and then we'll make a decision on inflation. That's what he said the last two meetings. What did this flip-flopper say today? Well, Mr. Sick today comes out and tells us, the committee is discussing how tariffs could affect inflation, and this puts us in a position to make a more careful assessment about rate cuts going forward. What? So now we're letting politics affect our forecast? Like, what is this? What is going on? Like, everything they tell us is just like topsy-turvy. It just changes every frickin' time. No wonder the market's pissed off, because you're giving us hints about the labor market potentially being on the verge of collapsing, and then you're telling us inflation was the biggest reason why you priced in fewer cuts for next year. But then you tell us that inflation is just a freaking technical error and that you're actually still on track. But you're going to start working tariffs into your inflation projection. What the is going on? Like, this is absolutely, I'm going to say it, full retard. Anyway. Then he says, the economy's still doing well, though. Everything's fine, which I get it. Yes, the Atlanta Fed real GDP, GDP indicators at 3.2%. It's fantastic. GDP is holding up. People are spending money like crazy, but everybody knows that's the same thing that happened in 2007. In 2007, everybody was spending money like they're drunk sailors because people had a lot of money because markets were at highs. The market always hits a high right before a freaking recession, so no duh, people are spending and GDP is high. And then all of a sudden you go into a recession, and what happens? They revise all the figures down, and everybody's like, how come they revised us into a recession? Man, I don't understand. This is just very, 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 very weird. But anyway, then he tells us, then he sort of backtracks on the warning that he gives us on the labor market, and he says, well, it's, the labor market right now is not cooling in a way that causes any kind of real concerns, and, it's pretty clear that we've avoided a recession. So, you could actually keep seeing a softening in the labor market, but the softening in the labor market is actually why we cut today. And I'm like, bro, I literally wrote down a quote of you saying you cut for the opposite reason just moments ago. And now it's never mind. I'm getting too confused because there's no consistency in his messaging today. I'm very, very frustrated by it. So anyway, what you have, let's try to summarize this all together because there's a lot here to put together. Let's try to summarize this all. Jerome Powell today declared victory. He told us there's no recession. He told us that next year is going to be great and the economy is totally fine even though the labor market is going to crap, at least worse than what we saw in 2019 and before the pandemic, and it seems like it's still slowing and we're kind of hopeful it'll stop. Then he tells us, hey, inflation is just a technical issue and that's why we cut rates today. And then he tells us, no, actually we cut rates today because the labor market is weakening. But it's not so bad because the economy is still totally fine. GDP is great. American exceptionalism. Everything is fine. Don't panic. Don't mind the fact that treasury yields absolutely crush the cost to borrow new capital equipment, new machinery, cars, houses, credit card rates. Don't mind the fact that a lot of our economy is based on high interest rates or longer term interest rates, which are all skyrocketing on this conference. While at the same time, you're telling us the labor market is weakening and all of the surveys you're looking at are telling you things are getting worse. So honestly, I've gone kind of from this point where like I like this guy to where I'm just like so thoroughly confused. At this point, I just feel like I'm being lied to. And I just feel disgusted about it. I don't know how to parse it anymore. I'm confused. This is very frustrating. And all I know is I need to go pee really badly. I have a course for sale over at meetkevin.com. You already know about it. I filmed it all this month. It's amazing. Stock trade alerts, wealth building strategies, course member live streams, tax strategies. Some of them you want to start taking advantage of this month before you go into 2025 to prepare for, Trumponomics. And the other thing I recognize is the NASDAQ is down. Holy crap. The NASDAQ's down 3.5%, Tesla's down 9.2%, Palantir is down 4%, the SPY's down 2.5%, Enphase is down 6%, Bitcoin is almost going to break 100,000 over here. Everything is breaking. Nvidia goes from positive to down. SQQs are the only thing that's going euphoric right now. Apple's going down. Man, the market's just as confused as I am, man. I'm gonna go. I love you all. Listen, no matter what the hell happens, I'm always going to be here for you. I just wish you all the best. I love you all. Cheers, okay? I got my, at this point, this Tesla cup is like worth more than what happened in the Tesla stock. Okay, never mind. I gotta go. Bye, I love you all. We'll see you soon. Bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.